You can trade the M3 on other things. On equities, you have to, say an individual stock or anything that moves a whole lot. You want to make sure you watch your position sizing, because a stock can cut in half overnight, where an index is not going to do that. I mean, we may have a substantial drop, but you're not going to cut in half. So your risk does tend to be higher. It's more depends on the volatility profile of the asset, and it has to be sufficiently priced. So you'd really want something that's $300 or more. And again, you said non-equity, so you could do that also, but it depends on the volatility of the non-equity. So you want an asset price in the $300 range, and you just basically set the trade up and see if you can balance it out well, and then you can do that. We do have some people who trade this on stocks. We have some people who trade this on oil, which is usually a reverse M3. It's usually backwards, because the risk is on the other side of oil, stuff like that. So it can be done, but that's what the M3 is about, right? The M3 is about learning to balance your position with manipulating your options around. And if you really understand this in the Russell, you can take the concept and you can apply it to anything. You want to do it in a smart manner. Like I said, certain assets have these tendencies to maybe cut in half, in which case you really have to watch your position size, but you can certainly do that.